Welcome back to CEO Money. I'm Michael Yorba, your host. All right, I've got Craig Cecilio, CEO Diversified Fund with us, DiversyFund.com. Craig, welcome to the show.
Great. Thanks for having me on the show.
I'm glad you're here. All right. Your mission is to disrupt traditional alternative asset investing and empower the average investor by giving them the same wealth building opportunities available to the 1%. Walk me through that. That's music to my ears, man. Just love to hear this.
Yeah, so we're a vertically integrated real estate crowdfunding platform. And what I mean by vertically integrated is that we actually manage, develop, and own the properties that you invest in. And these investments that we focus on are between anywhere from $5 million to about $50 million in value. And those kind of, generally speaking, go towards more institutional investors, hedge funds, really ultra high net worth individuals are the ones that get those opportunities to invest in those type of properties. Okay. And so we've been leveraging technology to let the average investor in with as low as $5,000 today. I believe it's going to be a few more months where we lower that barrier to entry to about $500.
Okay, and you're using a crowdfunding platform. How much have you guys raised so far on this crowdfunding platform?
Last year, about 12 months, we put over $100 million of assets under management.
Okay, all right. How much? So am I to assume that you probably were like the 10% ratio for crowdfunding money to raise to property?
About 20.
20%? Not bad.
Yeah.
Not bad. You always hear these stories about people making money on crowdfunding and being able to raise money, but it's hard to meet the guys that actually did it. I hear about it, but I'm glad to have finally met somebody. So you found it successful. The more successful you are in the funding of the on the ROI for the properties that you're developing, obviously the more successful you'll be to go back to that crowdfunding platform and just keep doing it over and over again. Is that the mainstay of the technology, or is there more to it than that?
There's a little bit more to it. I've been doing syndication since 1997, 1998. Mm-hmm. So it's been a very organic, natural process for me to get involved with crowdfunding and leveraging the technology. So I've already had thousands of investors in my database when I started out. So I understand how the investor is and what they're looking for. And also how to manage assets over the years and manage it through different market cycles as well. And definitely with the technology component to it, I mean, you could kind of get this all the way down to $1 per person if you wanted to. It just depends on how well you build up that technology.
I get it. So tell me more about the vertically integrated platform, the no middleman process for Diversified or Diversity Fund.
Yeah, the platform, the DiversyFund website, and
right.
It's pretty simple to use. You just kind of go to the site, and it has all the information that you need to make a buying decision, and you just basically put in your information, click a button, and it wires the money from your bank account to our escrow account. Along the way, there's documents that you have to sign, and that's stored on the site as well. You get a user login, password. We have updates on there. We're always using social media, sending emails out, using videos. You can see what's going on in real time. And a lot of our investors come back and use the platform for updates, to check out their holdings, what they own, and also to see the progress of the projects we're working on.
Let's hit a little bit on the downside. What problems are you aiming to solve with the Diversity Fund?
Oh, I think the biggest problem is most of these investments are reserved for the 1%.
Right.
So just break it down to keep it simple. Let's say you're trying to raise $5 million for a project. The developer or asset manager of that project is going to reach out either to a broker dealer mission to raise the $5 million, or he's only going to want to talk to a few people, maybe 3 or 4 people, to get that transaction fulfilled. So now we take that whole kind of network and system and say, hey, there's a lot of fees charged in that process as well. So we take that whole process and open that up to just the average investor, leveraging technology where it speeds up that process. So we could go get $500 from 1,000 people, which is the same thing as going 5 from 1 million people and we could do it in real time. So we could do it within the same amount of time it would take you. And in some cases, ideally, if we're talking about when this really takes off, it could be quicker to get the funding fulfilled.
Okay. Let's say that I opted in and I went through the crowdfunding process and I invested in your fund. How do I know what percentage of what it is that the fund is buying is mine, and how do I redeem my money? How do I come to a liquidity event where I can cash out either all or a portion of my investment that I put in?
There's different types of investments on our platform right now. Some of them have an expiration period, but it is real estate in some cases. So some of the ones that are based on the offering itself or the project itself, it's just when that project gets consummated and disposed of or repositioned. And we have an assortment of funds as well. Some funds are short-term in nature, 1 to 2 years, and some are long-term in nature, growth-oriented funds, which are 5 years in nature, just depending on what asset you're going to invest in.
Okay, so when there's a liquidity event on the investment that the crowdfunding group has made, that's when you have distributions to them, or the opportunity to reinvest, or a little bit of both. Is that what
both,
I'm getting?
Yeah, a little bit of both. We offer right now a little bit of everything.
Okay, all right.
We have an income fund where you can reinvest those funds if you like, and it pays distributions quarterly.
Mm-hmm.
We have a couple up there that are per the offering. So some of them are quarterly distributions as well. Some of them are when the project is consummated. You get your principal back plus your return, and then we have the growth fund as well.
What are the size of these funds that when you finally get to full capacity on the fund and you launch it and go out and start picking up some properties? What are the size ranges?
Well, we're shooting for, with the newer funds, about $50 million in size with the funds. Some of our closed-out funds on single offerings were, one was $2 million, one was $5 million, another one was $6 million. And they're all fully funded funds.
How many do you have running now?
I would say we have 2 funds right now that are open for investment, and we probably have 6 or 7 other offerings that we fulfilled already and closed out.
Okay. Are they all single family or are they different?
It's a mixture. We are predominantly, we've done a bunch of single family. We're very, bullish on mixed use commercial multi-unit apartments.
Is there a geographic target that you're trying to focus on?
We're not constrained by any geographical locations. We're predominantly located in California, Southern and Northern California, and my co-principal is from the Salt Lake City area. Mm-hmm. So we have a great deal flow coming in from those areas right now, and there's certain things in those markets which we do like. We're open to going across the whole U.S., but our pipeline's up to $500 million right now in those areas. So there's not a need for us to go nationally, but we can go nationally once we increase in size.
Okay. So I'm getting that you're focused in California now with views on the horizon for other states, other cities, right? They get that right?
Yeah, I mean, okay. Right now the market, we find we have opportunities in these markets today to take advantage of. We'll be sourcing other markets as well. It's not going to be forever that we're going to be producing these returns in California.
But we got about a minute left, so I'm just going to ask you one more question, then we'll take a break. We'll come back and we'll catch up with the rest of the questions. But just one real quickie. The Reno market used to be really hot. I mean, since you're in California, that's like your neighbor. I wonder, is it as hot now in that part of the world as it used to be over the last, say, 5-7 years, or is it kind of cooled down?
The Reno market?
Yeah.
I wasn't really focused on the Reno market even in the last downturn. It was a little bit more on the Vegas market. Mm-hmm. I'm not familiar to be an expert to talk about the Reno market. We're seeing some parts of the California market slow down in certain respects. And definitely the multi-unit's pretty aggressive out here right now. There's a lot of people diving into that market with some of the housing shortages going on. And the red tape that the cities and counties put you through to build anything doesn't really help that cause for the housing shortage in California.
All right, Craig, let me take a break. Craig Cecilio, CEO, DiversyFund, We'll be right back in just a few minutes. Segment brought to you by CEO Money.